Good morning. This is Bruce Fleet, President of Fleet Capital Management. It is the morning of Saturday, December 3rd, 2016. I just wanted to give you an update on some things that I've been working on for our portfolio's benefit, just to give you further insight and explanation. Before we start, I'd like to say if you are watching this video or listening to this video and you are not a client of Fleet Capital Management, which we refer to as FCM, please don't consider any of the stocks that I mentioned during this video as a recommendation to buy or sell. This is for educational purposes only and primarily for clients of Fleet Capital Management. With that said, there are two things that I want to go over with you and help you understand, like I said, just a little bit more. One, we've been doing some earnings trades. You may hear me, or when I send out emails, you may read that I'm talking about an earnings trade or an ESP trade, same thing. That's a Zacks term, and I do use Zacks Research in Chicago for probably 70% of my earnings analysis, and then I use Investors Business Daily to support that as well. But we've been successful so far in our earnings surprises. The way this all started is when I pull up certain websites that I'm viewing all day long, there's a section in there that will show me largest gainers for the day, what stocks have gained the most for the day. And whenever I see stocks with a daily gain of 7%, 10%, 17%, 21%, I thought, man, I wish I was in those stocks. How do you find those stocks? What is causing them to be up so much in one day? And I assumed for a while that it was just news that came out. But when I drilled down deeper, what I found was more than 90% of the time, it was because of an earnings announcement. Okay, well, that piqued my curiosity. And a few months ago, I started studying earnings announcements. I've always found earnings to be phenomenally frustrating because you own a stock. We've had it together. We've had Edwards Life Sciences. You own a phenomenal stock. They come out and their earnings are good. It matches the estimates, and then the stock craters. So I started studying, you know, is there any way to predict the stocks that won't crater or have a greater propensity to go up when earnings are announced? And in my conversation with Zacks, who I've worked with for decades, I don't even know how long I've worked with Zacks on different investment research, they had just created a metric called the ESP to help in that. The ESP is an expected surprise prediction of an earnings announcement based on all of the analysts in the country that follow any particular stock. Because Zacks felt that they really have the inside track. They go and meet with the CFOs and such. Well, they've got a 70% success rate. And what I've started working on and what you're seeing in front of you is I wanted to see if we could up that success rate. And 70% is good. But I wanted to see if we could up it. Maybe we could up it to 75% or to 80%. So I'm creating a system on their system, and that's what you're looking at here. So let me explain to you how this works. Here's a symbol. This was Burlington. The dates in here are when they report. They reported on 11/22. They had an ESP number from Zacks of 6.06. I'm not going to go into detail of what this means. Zacks says you want greater than 0. I actually am okay with 0. That means that the most recent estimate is in line with the consensus estimates of what their earnings report will be. So it is predictive. It is future looking. You will never see in this list a negative because it has to have at least a consensus that matches. Anything above means that like 9.52 for Kroger, which we're going to get to in a minute. This means that the most recent, which is usually the most accurate, is 9.52% above the consensus estimate. So there's your predictor. But anyway, that's the ESP number. Going back to Burlington. IBD is Investors Business Daily, who I use for fundamental analysis and some technical analysis. Their earnings per share, I like to see 90 or better. This fell into that category, so I made this box green. The IBD industry rank, I'd like to see 50 or better. This came in at 35, so it got a green color. And then the Z rank, or the Zacks rank, is 2. I like to see 1 or 2. Zacks says that they use this on 1, 2, or 3 rated stocks. So I'm doing some analysis on 3 rated stocks, but my preference, you will get a green if it is, and you'll understand these colors in a minute, if it's a 1 or a 2. I'm looking at the PE ratio, but I'm not going to spend time on that. That's for volatility of the stock. And then I've got some notes, and if you see an NT, that means I didn't trade it. If you don't see an NT, that means we did trade it. So you and I, you meaning RTA members, risk managed trading account members, we bought Burlington right before the earnings. We saw 3 green, and we also saw, they also had a surprise the previous quarter, and I didn't make a column because if they don't surprise to the upside on the previous quarter, I don't buy it. So in any event, we had 3 green, and we bought this stock. We only held it for a few hours, and we were up 12%. The next one that we bought, CPRT, had a positive EPS. It only had 2 of the 3 greens, if you will, and that one was down 4%, and we sold it, no big deal. But that was a loss. We did trade that. Thor Holdings, we owned it, and I'm using this for stocks that we own because every stock comes out with earnings every 3 months. And so not only am I looking for stocks that I wouldn't necessarily own, I'm just buying them for the earnings surprise, like Burlington. This was a stock that we did own. And we decided, then I've got to decide, do I hold the stock as we go into earnings, or do I get rid of the stock before earnings because of the risk? So this new system is helping me with that too. It was a 0.00, which I'm fine with. Zacks likes a minimum of 0.01. But I had 3 green in here because of the numerical values of each category. And so we held it, and the stock popped. We already had a gain, but the stock popped up 11.5%, and then we sold it to capture that gain. Many times these earning stocks, if they have a dramatic upside for right after the earnings announcement, it'll drop back. So I use really tight stops. In any event, I'm working on the stop management as well. So you're starting to get the feel of this. The next one was PBH. It was on 11:30. It only had 1 green, but before I had my rules in place, I still bought this stock, and we were up 2.5% in an hour or 2, which, believe me, I'll take. But what we're looking for is accuracy percentage. How many times are we accurate? Then Kroger, KR, came out on 12/1. BO means before the market opens. AC is after the close. Had a very high ESP. I had, well, a light green because it was close to 90, but not quite there. But I only had 1 green out of the 3. I decided not to trade it. NT means not trade, so it was not in your account. Earnings came out, stock dropped 3.5%. Okay, glad we didn't trade it. Ulta came out on 12/1. It was a 0 for ESP, which again I'm okay with. It had a very high earnings per share estimate, had a very high Zacks rank, but it had kind of a weak industry group. And part of my study is figuring out what magnitude does industry group rankings. Remember, out of 200 industry groups, I'm looking for the top 50 or top 25%. I'm still studying what magnitude this has. But anyway, for some reason, I decided not to trade this. Oh, there was no analyst commentary on the earnings. That's another thing I look for. I want to see within 5 days of the report, I want to see an analyst come out and give me all of their reasons why they're going to outperform. We didn't trade it, but it was up 5.78%. So we missed that one. Again, I'm really looking for 2 greens, but I also want commentary. So this is something that I'm creating. It's fairly new. AMBA, it had 2 red, so I didn't trade it. NT, it also had very medium or mediocre comments from an analyst, and that went down 7.45%. We didn't trade it. So as important as it is for us to be in stocks that go up, we need to be out of stocks that go down. And the system is starting to prove that out, okay? The next three that are coming up are SUPN. I don't remember the company, but it only has one green. I didn't find any strong commentary yet, so I'm not going to trade it. That could change before the 6th if some strong commentary comes out, but I doubt it. Next two biggies that are coming. Play is Dave & Buster's, is getting a lot of rave reviews from analysts, but I only have one green here. I'm probably not going to trade it because I only have one green. I don't have any additional supporting commentary. This comes out on the 6th. I'm hoping some commentary comes out Monday or Tuesday. This is something that could change, and these numbers change every day too. Well, these first two only change once a week, but this number can change. So if this goes to a 2, I'll have 2 green. If I get some commentary, we may trade Dave & Buster's. I haven't decided yet. AVGO is Broadcom. That's a stock we've owned in the past. We have a positive ESP. We have 3 green. Now, as I develop this, I'm starting to create rules, because you've got to have rules. And my rules that I'm starting to create are 3 green equals a 10% position. 2 green, that's FedEx, this is coming up on the 20th, equals a 5% position. 1 green, we don't trade. So here's another 3 green scenario. We've had 2 others. Here was a 3 green scenario. We made 12%. Here was a 3 green scenario. We made 11.5%. We've got another 3 green. That is a 10% position. Now, I've already purchased this stock. As you saw, I purchased it right before the close on Friday. And I did that. I usually buy the day before the earnings, but it was trading at a very low value because the day before, actually the 2 days before, Wednesday and Thursday, tech stocks got just massacred on the downside. And it put this at a discount. So I decided to buy it early. I think that's going to pay off for us handsomely, but we will see. So this is ESP. This is the earnings trade that I'm doing, and as there's tons of them. In an email, and I'll keep doing this for probably 50 trades, maybe more, because I want to see my success rate. Is my success rate 80% or better? If so, I've beaten Zach's, which is the goal. So we'll keep track of this. But earnings are quarterly, and they're grouped in first calendar month of each quarter. So in January, we may have an earnings play every single day. Some days we'll have 2. Some days we'll have 3. And then in February, March, we'll have 1 a week, once every other week, just like we have had now, because we're in off season for earnings. So I've been speaking a lot about earnings in my emails. I just wanted to show you this. As with everything I do, we try to mitigate the downside, and we try to increase our probabilities. In a difficult market, which we've had, it's a little harder to do that, but the market does seem to be changing and building a new trend. Even though we had a tough week last week, that's okay. In an uptrend, you do have bad weeks. What you want to see the trend. So this is earnings. Let me shut that down, and because I really want to show you something else here. Actually, before I do that, let me go back to Avago, or bear with me 1 second. Let's go into this. Here we go, Broadcom. I want to show you why I bought that. Let me get a little annotation tool. Draw it. Bear with me for just 1 second here. Let's see if that works. So this is in this area. This is called a flat base. The stock has been trading in this base, and this green line down here was the low end of that base, if you will, okay? And the dashed line is kind of the high end. So you would look at this as support and resistance. A breakout is when the stock price breaks out above the resistance level. Well, what you can see is that these are 1 week. Each bar is 1 week. I bought this on Friday really close to the low. Not exactly, but really close to the low, knowing that earnings is coming out in 5 days. And I'm hoping that we can make this distance up even before earnings, which would give us, 3-4% return, 5% return. going in. So that just kind of pads our success rate. If the earnings come out good, it gives us an extra 4 or 5%. But also, if earnings come out bad, well, we got a 4 or 5% gain, and maybe it goes down to a 0 gain, but we didn't lose anything. So I just wanted to show you that. One other thing I want to show you, which is fascinating, which I've been working with for a long time. I've decided for ETFs. I have a list of about 32 ETFs, I think it is. I can actually go over here and find it and show you. Here's my ETFs, and let me blow this up. So this is my universe of ETFs, and this represents 31 or 32, here it is, 32 different sectors of the market. And if you follow financial news, then you have heard a lot about sector rotation, and you may or may not understand what that means. Well, there are a lot of different sectors in the market. There's large caps, there's large growth, there's large value, there's mid caps growth and value, there's small cap growth and value. There's the technology sector. I would call China a sector. There's consumer discretionary. Here's mid cap growth. Here's emerging markets. So there's a lot of different pieces to the market. And what we've been seeing, especially since the Trump election, is what's called sector rotation. And what that means is the sectors that have been doing extremely well have all of a sudden gone down, and new sectors, based on what we perceive to be Mr. Trump's policies, are taking place. So how do you understand that sector rotation? Well, here's a tool that I use for sector rotation, and let me explain to you how. Notice 4 different color boxes. We'll get to all these things in a minute. In the dead center of it is the S&P 500, and this is for 1 year, and I'm looking at a weekly. So this is a rolling weekly chart. Monday through Friday is 1 week. On Monday, it'll be Tuesday through Monday, and then Wednesday through Wednesday, so it's a rolling week. It's always a weekly chart. These are called tails, and I can change the length, which I'll do in a few minutes. This is 2 weeks. So this was where it moved 1 week, and then this is where it moved 2nd week. And I can change the tail length, which I'll do for you in a minute. But these are those 32 sectors. And what we're monitoring here is momentum. Momentum, I could explain if you are familiar with moving averages, or especially the MACD, which is the moving average convergence divergence indicator. Momentum, when a stock has strong momentum, it's going up on this y-axis, that is a precursor to a stock outperforming the market. So anything above this horizontal line has greater momentum, not performance yet, but momentum than the market, the S&P. And if it's to the right of the vertical line, it has better outperformance. So, and it's relative. This is called a relative rotation graph. So in this quadrant, a stock or an ETF is improving if it's in here. If it's in this quadrant, it's leading. These are the leading sectors in the market. If it's in this quadrant, their momentum is weakening, and momentum precedes price. So if you have improving momentum, you can anticipate improving relative strength or relative performance in price. If you have weakening momentum, remember, as we go down, we're weakening momentum. We still may have some outperformance, but we need to be cautious because it could be moving into this area. Now, the designer of this graph lives in Brussels, and what he realized in his studies is that stocks or ETFs, same thing, tend to move clockwise, and it's not perfect, around this graph. So you'll know that these are the best performers and these are the worst performers. And let me just animate this over 1 year. Watch don't focus too tightly or it'll make you nauseous, but just watch the general momentum or the circular movement of how this works. This is 1 year. Watch this. Isn't that fascinating? So they don't always go in that perfect clockwise. Like I'm going to take one, just one for now. I'm going to take the financial sector. So this is the financial sector. They've been doing fantastic since Mr. Trump was elected. And let's see that one for 1 year, just to get an idea. Now it'll be easier to see. Watch what this does. Here it is. It's in the red. Now it's in the blue. Now it's in the green. Whoops, it dropped back down. Now it's in the green. Whoa, it really went back up. So it's not a perfect science, but it's a good science. And it gives you lots of good information. So remembering these colors, green is the best momentum, best relative performance. Let's go down to this chart now. So this is 2 weeks. Everything's the same. 2 weeks ending December 2nd. And here you have that green, which is the top right. The blue was the top left. This was the bottom right. This was the bottom left. So over the last 2 weeks, since I have a 2-week timeline here, the S&P is up 0.5%. Okay? And we're looking at relative rotation. So the top box is supposedly the best box. Let's see if that pans out. Well, look at the gains of those stocks, ETFs that were in that top right box. Interesting. You don't see a lot of other green. A little bit scattered about, a little bit, but you can see the propensity of outperformance, relative performance to the S&P was up there. Interesting. So here's another thing. IWM is a stock that we own, or an ETF that we own in some of my portfolios, and you can see the direction is up. The momentum is up. If I come out of that and I go into VOE, that is something that we own, mid-cap value. You can see it was down here and weakening, but now it's turned back up. Let's go over here for a second, and let me show you. They don't always go from here to here. Let's go corporate bonds and see what that looks like. See, that's up here, but it's falling. So I won't buy anything in the improving category that is losing momentum. One of the recent trades that we made was commodity share index. It was here, and it was gaining momentum, and it was moving towards the right, which is relative outperformance. So we bought that, okay? And it's up 6.3%. So we're doing really well in this. Now, we may not have owned it the entire time it was up, because while we probably bought it when it was over here, it was to the left, so it's underperforming, but it's gaining momentum. So we probably had a few days of losses, and I'm sure, you look at your account and you say, why did he buy this? It's just going down. Here's why I bought it. Here's why I bought it. So I'm looking at this relative momentum, and you will notice that we own a number of these in the RTA account. We own DBC, we own VYM, we own VOE, we own VTB, we own the Dow, DIA. What else do we own? We own IWM. We don't own this yet. This has just been very volatile. It is the financial sector that's done really well, but I'm wondering if it's starting to run out of steam. We'll see. So as an ETF falls into this quadrant, like the Qs, the triple Qs did, I'm getting wary of it. I'm looking closely, and the Qs have been underperforming. There it is, 1.4%. It doesn't, even because it's to the right, doesn't mean it's going to outperform. It means it should outperform. I'm going to give the Qs a little bit more time because that's just a broad index of the NASDAQ. But as things come in to here, we'll just kind of get rid of them. So I just wanted to show you this. This is a relative rotation graph, RRG. This is how I trade. By the way, if you also have a long-term hold account, an LTH account, I'm using this for your LTH account as well. I'm just using more conservative of the ETFs, not as aggressive of the ETFs that I use in RTA. Also, RTA I check on a daily basis. LTH is on a weekly basis. I want to make far fewer changes. I'll have more time that I'll leave things in the LTH because it's more of a long-term account. Most clients who own LTH don't want a lot of trading. So a little bit of a difference, but some overlap, some overlap. Both accounts own DIA. The LTH does not own DBC yet, but I'm about to put that in. So you'll have some overlap and some not. So anyway, I hope that made sense. I know this was a little bit complex, this recording, but I want you to see, because you're seeing a lot of change. And if I sell an ETF, which I'm about to sell VOT, it has moved into this area. If I sell something, you'll know that there is we sold SPLV. In long-term holding accounts, we sold utility funds. That's utilities. So I want you to know that there is a reason that we do everything, and that's the same for the earnings plays, which I just showed you. So today we covered earnings announcements, which I believe are going to become a more and more or a bigger part of what I anticipate to be the success of the RTA, especially 1 month out of each quarter. I mean, if we can add on a daily basis 2-3% to each stock that we buy that is a trading stock, well, that helps our overall performance. Also, now we have this for stocks that we own in RTA. So there's earnings plays and then there's stocks that we own. And that will be helpful in both. In any event, you can always watch this video again. I know I went a little quick. I hope this makes sense to you. I hope it's worth your time. I love when you send me a feedback email that says, I liked it, it was helpful, I didn't like it, I didn't understand this, could you explain? I really appreciate those. But I did want to give you this update on earnings plays and on sector rotation, which is a big part of this. So with that, have a fantastic weekend. And we will see you Monday morning. Talk to you then. Bye-bye.